B&G Foods Inc., BGS. All right, it's canned food, packaged food, and whatnot. And so the industry is packaged food. The headquarters is Parsippany, Troy Hills, New Jersey. The dividend yield is 7.4%. P ratio 9.4x, pretty decent. The debt to equity super high, but we'll go into why it's really high. You know, when you look at dividend companies, you really don't want to see their debt to equity that large. You know, you like to see under 2, definitely under 1, even better. The short interest is very high, 11.5%, but that gives us some spring power. And right now, my first initial buys were in like the 150 range, but I've been continuing to buy. And so my average cost per share right now is $10.22. At the close on Friday, it was up at 10.31. So we're up a little under 1%. I'm not too worried. I'm really waiting to see what happens when this recession pops off. And unfortunately, when, you know, unemployment affects people's purchasing power, they have to start paying back a lot of credit debt, and they're going to have to lessen and cheapen what they buy to sustain themselves. And packaged canned foods is a way to be doing it. You see the rise during the COVID era. All right, it got up to about $40 during the COVID era because everybody was buying canned food. And so we could be going to something similar like that again. I'm not saying it gets to $40, but I would like to see, you know, maybe a double up to 20. You know, I'll take 17. And so when we talk about the Gematria, BGS, Canned Foods, Pluto, and Aquarius 2024 equals 331 ordinal, 133 reduction. We have B&G Foods, BGS stock, has a good year in 2024, 313 ordinal, 33, and 133 in reduction. All right. B&G likes to acquire orphan brands and 133 reduction. And so here are the couple orphan brands that they bought that at some point nobody really wanted, but these are big names. Cream of Wheat, Green Giant, Crisco, Clabber Girl. You know, you see these on your shelves every day. You know, bakers love Clabber Girl. All right. That's a big baking powder brand. That's a big baking brand. Crisco, still today, my aunt, she does not make a pie without Crisco. People can say what they want. You know, obviously vegetable oil not being the healthiest, shortening not being the healthiest. I understand that. But Crisco still has power, brand power in this world. A lot of people, they don't bake without using Crisco or Clabber Girl, especially when going into recession. Baking goes up a lot higher. Bread's a lot cheaper to produce. It goes a long way. And so I really do think it plays a role. They have a couple other popular brands as well. Ortega, you know, the salsa brand, the Mexican product brand, the Mexican food product brand. Very important. Green Giant veggies, recession time, 331 English ordinal. And so that's the basis of B&G's Foods. Now let's get into some of the financials of this company, and we talk about their debt and what they've done, okay? And so B&G Foods Inc., BGS, their assets on the book, $3.96 billion, almost $4 billion in assets. Their liabilities, which we'll get into, which is mostly loans, is $3.12 billion. So their net equity is at 140.6 million. They have a low float, shares outstanding of 78.6 million shares. Okay, and so when you just base off net equity fair value, when you take the net equity divided by the shares outstanding, you get a net equity fair value of $10.69. So right now, it's still trading below its fair book value. All right, so there's opportunity to be had, and that's why I've been buying. In 2022, the revenue was 2.16 billion. So it's a company that's making money. Again, you see the brands they have. They're trapping out some good revenues, okay? Operating expenses, not too bad either. All right, they have $215.24 million of operating expenses. All right. And then they have a dividend expense, 59.75 million. Okay. So those are the expenses they have, around 300 million, but they bring in 2 billion a year. All right. And so we go back at their liabilities and whatnot. Okay, where do the liabilities come from? Again, when they when B&G Foods wants to buy a company, they usually take out a loan to buy it and to get them under. And what they're smart at, they try to get brands that they know will keep selling. So over time, it works out. And in 2023, they got a loan. So first, their cash and short-term investments on hand is 359 million, almost $360 million in cash and short-term investments on hand. So they're very liquid. They can have any opportunity. If a big brand wants to sell off one of their brands they don't want anymore, B&G Foods can come in and buy it like that because they have the money for it. All right. And they got cash from financing based on loans at 300.33 million. All right. 300 million in cash financing. This just happened. And so that's partly why the stock has been going down, because they just got debt heavy. And so when you actually look at their filings and you add up all the senior note loans collectively that range from, as you see right here, they range from being due 2025 next year, 2026 next year, 2027 and 2008. All right. So the next 4 years, it comes out to be about, one second. It comes out to be about $2.5 billion in senior note loans collectively from 2025 to 2028. And realistically, the biggest one is going to be the 2028 one. I'm not too worried about the other ones. But if they really wanted to, they could almost cut out all the senior note loans they have just in 1 good years of revenue. All right. We haven't gotten that last earnings report yet for 2023 because their Q4 earnings report is going to come out in February. And so realistically, if they wanted to, which I know they don't want to because they like to keep liquidity, they could pay off their loans. But again, they want to stay liquid because you never know when an opportunity comes into place when they want to buy a brand. Okay. And so here's some of the numbers you can see. You can go on Google stocks and see this, Google Analytics and see this. But Gematria wise, we have BGS stock during the recession era. Using debt to pay dividend is not bad. Buy BGS stock before recession in 2024. They all equal 333 in ordinal, 135 in reduction. All right. And BGS stock during recession era and using debt to pay dividend is not bad, equals 171 in reverse reduction as well. All right. So the Gematria is telling us this is kind of, again, I'm not a financial advisor. I'm not telling you to buy. But what I'm saying is the Gematria is saying this is an opportunity to be had. And I see that, and that's why I'm getting in it. B&G Foods makes enough to cover all loans, 137 in reduction, 33rd prime. All right. Again, and when people look at this company, they see, well, they have a lot of debt on the books. Yes, but they have enough money coming in to pay off those loans, but they need the loans just in case during this recession, a bigger company can't do a product anymore. And that's when we come in. That's when the iron strikes, okay? And then BGS used financing to pay the dividends, 331 in ordinal. All right, and so we're getting into the last slide of the presentation. It's been about an hour. And so hopefully you guys have learned a lot thus far. Canned food consumption, employment relationship during 2024 recession. I have a lot of headlines. They haven't officially called a recession in 2 years. We've been in a bear market in the stock market. You take out the Magnificent Seven. All right, people have been losing their jobs. But let's look at some of the headlines that affect this company. Biden steel tariffs could drive up canned food prices, trade group says. So canned food, good food prices will be going up. That was dropped in December. What sells in a recession? Canned goods and condoms. They really didn't even talk about, the contraceptives in that article, but definitely canned goods, and this article is back from 2009 when we were in the great financial crisis. So canned goods are what sells in recessions. Americans face increased unemployment in 2024. Again, that affects purchases, especially with the shipping issues that are happening right now. Buying fresh produce sometimes isn't always the best option because it does not last. All right, it does not last. Then we have December payrolls unexpectedly surge as wages jump, employment remains low, and so big. And this is from Hedge. This is from Zero Hedge. He brings up the number of full-time jobs actually plunged 1.5 million by 1.5 million in December to its lowest since February 2023. So I lost 1.5 million jobs, and it seems like it's going to get worse. And so I went back into the archives. I went back into the archives of the New York Times, and I found an article written by James J. Nagel on July 12th, 1975. Demand continues heavy in the frozen foods field. And the article name is Recession Changes Public's Food Choices. Recession changes public food choices. Demand continues heavy in the frozen food field for orange concentrate, large-sized vegetables, think of the Green Giant, in poly bags, pizza, hamburger, and cheaper meat cuts, and frozen potato products was found. The E.D.W. Williams, publisher of Quick Foods Frozen Foods, confirmed that there is a continuing demand for many frozen convenience foods, and that lately several commodities that go into making of such foods have come down in price. This includes flour, cooking oil, margarine, tuna, eggs, and rice. So we got to be looking at the cooking oils, Crisco. All right. And so here's some gematria in regards to this. Unemployment helps canned foods. Clabber Girl and Crisco, recession proof. Canned food in demand while in a recession, all equal 333 in English ordinal. Best pies with Crisco, 222 English ordinal. Best pies with Crisco and Clabber Girl, 330 English ordinal, 33. Then we have Clabber Girl recession revenue, 133 reduction. Baking is mostly recession proof, 137, and reduction, the 33rd prime. So as we should have a tumultuous 2024, there's an opportunity here with this stock, BGS, B&G Foods, to make some money. All right. I'm not necessarily sure what it could go price wise, but it's right at its fair value, right under it. So you're getting a discount, and we see the chart from the past. All right. During COVID, it got to the 40s. All right. It even got a little bit higher in 2016 when we were having some issues. So these things are all possible, especially when it has a low float. And BlackRock owns about 7% of the company. All right. So these are things you need to take in mind. If you're interested in B&G Foods, take a look at it. I'm in it.